Hey y'all, it's Wednesday afternoon, about 5:15, and thanks for joining me here on this Facebook Live. I had a little question for you. Maybe you've heard, or maybe you haven't heard, that the IRS will file tax returns for you for free. But it's not exactly what you might be thinking. And I'll explain. The IRS will sometimes file returns for a taxpayer when they haven't filed for themselves for some period of time. It's usually about 3 years or more, because the IRS penalty for failing to file times out. In other words, it stops at 3 years. So consequently, we have folks that come in to see us that we ask them how much they owe, and they'll bring up these notices and they'll say, well, I know for sure I didn't file myself, so how do I have these balances on my, why am I receiving notices that I have IRS taxes due? This is just, like a phantom return, or what's going on here? And usually you can look up in the right-hand corner of an IRS notice whenever they send you something saying that you owe them, and it'll say tax year and tax type, and so it'll have the tax year, and then it'll have 1040. And typically when they file a return for you, they put like 1040A on there, and a lot of times that means that they have filed a return for you. They call it the substitute for return, or SFR, and these are nasty little creatures, because as you can imagine, when the IRS has to do a return for you for free, and they're forced to do it, then you don't want them to do it for you. They don't give you any deductions, really any exemptions. They don't give you any real room to breathe. They assume that you did really great during the years that you didn't file, and so they stick you in the top tax bracket. Then they take those reports that other third parties have filed on you every year, things such as 1040s, 1099s, or excuse me, not 1040s, W-2s if you're a wage earner, 1040 being the personal individual tax form. 1099s, though, for self-employed folks. In other words, documents that other people file on you, companies, for instance, whenever they want to take their own business expense for having paid you some wage or for some work that you've done for them. So the IRS takes all those things and puts them together, and again, gives you no real deductions or expenses there, because they don't have any at hand. They put you in the highest tax bracket. They run it through straight line computations there, and they spit out this nasty number, and it includes penalties and interest, of course. The penalties for failing to file and or pay also goes into that thing, and what it is just some really usually god-awful number that you wouldn't file on your worst enemy. How do you find these things out? We've talked in previous videos about getting your master tax file from the IRS, the account transcript, which will show what years have been filed and how those have all been assessed, what years have not been filed. And then they'll also show the substitutes for returns. They may say 1040A on there. Sometimes they don't. They'll say substitute for return on there. If you don't have any substitutes for returns, as we've talked about before and is outlined pretty extensively in my book, The Ultimate Survival Guide for IRS Problems, and you can pick up a copy for that of that at traviswatkinsbook.com. You can download it right there for free, and it talks about these things and many other things that we're outlining here today, but if it doesn't have an SFR out for any given tax year, then you can assume that you need to go back at least 6 years and file original returns there. And why 6 years? There's an industry standard there that ties right alongside with the IRS's statute of limitations for criminal penalties, misdemeanor, for not filing. In other words, the IRS could go back up to 6 years and try to get you prosecuted criminally for not filing returns. So you go ahead and you file at least 6 years of returns there. That's kind of the industry standard. Also, kind of as a side note there, if you do file before the IRS brings any type of a criminal investigation for failure to file tax returns, in other words, you beat them to the punch and you're proactive on this. And by the way, it's the law anyway, so you should be doing this if you're wondering. But if you go ahead and file your original returns before they start any type of criminal investigation there, then they will not move forward with any type of criminal penalties there, for at least for failure to file, which carries up to a year in prison for this type of misdemeanor. All right. These substitutes for return are considered audit reconsiderations. And what that means is, yes, these are audits that the IRS does, little mini audits, really. They are auditing those 1099s, W-2s that other third parties have filed on you and coming up with a return, and they do consider that an audit. So when you file something else, an original return, to challenge that audit, it is considered an audit reconsideration. And when you, if you are doing these yourself, we've talked about previously that you can't file really anything other than the last year of tax returns electronically. So you'll be filing these or preparing these in paper versions, even if you get some software to come up with old years and prepare those old years. You'll be filing them in paper form, and you'll be doing those in separate, you should be doing those, mailing those to the IRS via certified mail by return receipt requested. And about to lose my screen here, sorry. You need to go ahead and write substitute for, or you should write at the top of these returns, audit reconsideration in pretty bold letters there at the top of this thing, so that they know that you're challenging an audit, a substitute for return. So be sure when you prepare those that you put that at the top. These original returns, when you challenge a substitute for return with an original return, these things aren't always fast. It can take up to 6 months for them to review your original filing, your audit reconsideration, and consider it to be the original return instead of that nasty substitute for return that they filed on you. If you don't get some notification from the IRS that they have accepted that return, I'd say within, certainly within 6 months, I would go ahead and file a Form 911. That's a taxpayer advocate form, and you can get those on irs.gov, or if you have a tax professional that's helping you with these things, they'll know to file a 911 return to kind of see where this thing is in the process, and we'll be able to maybe pull some strings to get that done either a little faster, or at least find out where it is in the process. Again, everybody, when they ask me, should I be filing some type of an original return over the top of a substitute for return, my answer is typically yes on that. And I've been thinking about any possible exceptions to that rule. The only thing that I can really think of is you might not want to challenge a substitute for return if you've got absolutely no documentation to support the expenses that you plan to put on your original return to challenge that substitute for return. And that happens quite a bit when it happens in the gambling context quite a bit, because a lot of gamblers, when they generate these winnings, they can offset the winnings with losses up to the amount of winnings, but they don't have the proper documentation that would hold up in an audit with the IRS. So if that's the case and you have substantial winnings and you really have absolutely nothing to support the losses, in other words, at the very least, some type of a game card, for instance, then you might want to seriously consider just letting the SFR go. In other words, not challenging the SFR. You really want to be careful with these types of returns, especially if you have a revenue officer. This is a little inside tip, and I think we've talked about it before, and this is all outlined also in my book, The Ultimate Survival Guide for IRS Problems. You can pick up your free download at traviswatkinsbook.com. But the insider secret here is the IRS really cares the most, maybe cares only in many circumstances, about whether or not a taxpayer gets all the income that should be listed in the return on that return. So as long as the SFR has all the income on it that you received for that given year, and you feel comfortable that that is indeed the case, that everything from an income standpoint is represented there, then you might not, there could be a circumstance there where you might let the SFR just go ahead and hold up and not challenge it with an original return. This would especially be the case if you're anticipating being eligible for a settlement through the offer and compromise program. In other words, you can't pay not only the amount that the exorbitant amount that shows up on the SFR, but you couldn't pay anywhere near what would come out if you actually filed an original return that was correct and lower. And these are kind of complex things that you really should be talking to a tax professional about, a tax attorney about. We do them at my office. Certainly, it's a very important part of what we do in the investigative process of figuring out what the best plan of action to solve a tax problem would be. And we're standing by. You can talk to somebody really 24/7 at 1-800-721-7054. All right. That wraps up some discussions here about the substitute for return at the IRS. I really appreciate you watching it, and y'all take it easy.